Welcome to the Daily Forkast, January 3rd, 2022. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Since its white paper back in 2008, Bitcoin has seen its share of ups and downs. But how might it fare as a teenager? We're going to take a look at that and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories coming out of Asia today. First up, while India is yet to clearly define its cryptocurrency laws, crypto businesses are facing a clampdown. What a way to welcome in 2022 raids on the first day of the year. New Year's raids by India's tax authorities on companies including the unicorns CoinSwitch, Kuber, and CoinDCX, as well as exchanges BuyUcoin and Unicorn, uncovered over $9.3 million worth of alleged tax evasion, with just $4 million of that total recovered. And authorities say Binance-owned Wazir X appears to have evaded $5.5 million in tax in a December 30th raid. In that case, authorities managed to recover, they say, $6.5 million, covering both the tax loss as well as interest and penalties incurred. Over in Japan, Square Enix, the game developer behind the wildly popular Final Fantasy franchise, says the company is now exploring cloud technologies and blockchain gaming in line with trends in NFT and the Metaverse. In his New Year's letter, company president Yosuke Matsuda acknowledged that while some fans are skeptical, the company believes that blockchain gaming, geared with its own token economy, holds the key to self-sustaining game growth. And while specific details were not mentioned, he did reveal that the company may issue its own blockchain-based token in the future. You can find those stories and a whole lot more at forecast.news. Meanwhile, Bitcoin has hit the age of 13, but will it become a moody teenager or grow older gracefully and maturely? While a teenage Bitcoin may not see the explosive 200% annual returns of the past, it may also experience less volatility. Forecast News' Carolyn Wright takes a look at the road ahead.
Since its white paper in 2008, Bitcoin has confronted skepticism over whether a digital currency could coexist with fiat currencies, experienced extreme volatility, and crashed spectacularly in 2018. However, investors who bought Bitcoin in early 2009 and held on to it have seen a total return of 5.2 million%. In comparison, Amazon stock has returned just 68,000% since its listing in 1997. However, Ben Emmons of Medley Global Advisors told Forecast News that such astronomical results are unlikely to be repeated. Competition to become the digital reserve currency is heating up. Indeed, according to the Atlantic Council, 9 countries have fully launched a digital currency already, with many more working on similar projects. But Emmons also sees wider adoption of Bitcoin continuing in 2022. And with a clear regulatory framework pending in the US, cities and states could move ahead with adopting Bitcoin as a means of payment for salaries, services, and goods. With Bitcoin maturing and achieving wider adoption as an alternative asset class, that offers potential for its valuation to rise with lower volatility than seen in the past. For Forecast News, I'm Carolyn Wright.
Direct listings and special purpose acquisition companies, or SPACs, have become popular alternatives to a traditional IPO when raising capital of late. However, they aren't the only options. A blockchain-based alternative would be to tokenize equity and to make those tokens available to a company's user base. And who better to ask about tokenizing the world in this way than Henry Chong, CEO of Fusang. Fusang aims to reshape investment markets with blockchain technology, and it's great to have you with us, Henry.
Great to be here again, Angie.
All right, raising capital, it's something we've all got to do. So how does raising capital on the blockchain in this specific way work?
Capital raising in the blockchain today is largely focused around ICOs, issuing utility tokens. And I think that's been a great proof of concept. It's shown that you can build alternative value networks around companies and communities, where you can both fundraise from that community and also find a way to reward that community for their participation. And I think the time now is for us to move to what I call crypto 2.0, using security tokens that can merge the best of tokenization with all the underlying benefits of a real security, a share, a bond, a fund, so that we can actually turn all of the stakeholders of these communities into shareholders.
All right, we've heard of security tokens before. What are the key advantages here going public in this way? I mean, how does it offer both companies and investors a different proposition, or is there anything to be wary of?
STOs have all the natural rights and obligations and investor protections of traditional equity, but with all the benefits of being in token form. And I think that's very, very important because, once I'm a shareholder of a company, the company can't just choose to issue dividends to half of the shareholders. And they don't need to specify that in M&A. This is just company's law in pretty much every country in the world today. But once we combine that with the benefits of tokenization, as I said, we can really rethink what it means to turn communities, stakeholders into shareholders. And there's a lot of talk right now about crypto companies going public on traditional exchanges. Companies like Coinbase and OpenSea have gotten a lot of attention for some of these plans. And it's understandable why they want to do so. They want to sell real equity so that people, including institutions, can become shareholders of these companies. That drive to be a shareholder is not going away. I just think that they're planning to list on the wrong place. And it's strange to have crypto companies wanting to issue paper-based shares listing on traditional exchanges where their own stakeholder base and community can't really or easily access their own equity.
Henry Chong of Fusang, thanks so much for joining us today. And that's the Daily Forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.